In the 1990s, he created a billion-dollar copper producer. In the 2000s, he launched what would become one of the world's top primary silver producers. And in 2015, he started what he believes will be his third billion-dollar company. This is the one gold stock to research right now. Visit futuremoneytrends.com/investright. Greetings and thank you for joining us at futuremoneytrends.com. I have a great guest for you guys today. Investment research dynamics. First heard him with Sean on the SGT report. Thought it was one of the most fascinating conversations. I've been doing my best to check his blog on a weekly basis. I have to admit, I find myself rather busy these days in the gold bull market, but I still love grabbing a cup of coffee and sitting down and reading some of these great thinkers in the alternative media, alternative finance commentary. And our guest today is Dave Kranzler. Dave, thank you so much for joining us.
Thanks for having me on again. I love being on your show, and not sure everyone would think I'm a great thinker. I'm sure there's plenty of people who think my work is terrible.
No,
goes with the territory.
It certainly does. Certainly does. So, well, sir, let's start off with the Brexit. It does appear that England is leaning that way. What do you think is going to happen, and what do you think the fallout is either way?
Wow, that's a tough question because, I mean, the way that I haven't been paying attention to the sort of the day-to-day machinations of what's going on there because it changes all the time. It's like a soap opera. And you know, in the back of my mind, and I'm sure the same thing is going on with a large part of your audience. I'm just wondering if this is part of, you know, showmanship going on over there, or whether it's a real possibility, because certainly based on the recent polling results over there, it looks like, if the vote were held today, it would look like England would be pulling out of the EU. So, and again, I'm of the opinion in general that when they're, at least in this country, when they're not going to get the results in an election that they want, they rig it.
Hey, I remember, and I know you remember the Swiss vote to make have some portion of gold back their currency, and all the polls were like, it was like, oh, it was starting to close the gap. It was getting really close. There was momentum on backing it, and then I remember, that thing was just blown out of the water. Like a massive majority voted against it supposedly, but as you just put so subtly, it's not who votes, but who counts the votes, which I think is actually a quote from Stalin, right?
Right, exactly. So, and that's actually the Swiss vote. I'd forgotten about that because I was trying to block out of my mind how horrible it was. But that's a perfect example. And so, that's an example of what I think could happen here.
Sure. Now, German bonds, they touched zero today, or I guess negative for the first time. The world is entering a negative interest rate policy tomorrow. As we do this call on Tuesday the 14th, tomorrow the Federal Reserve will make its announcement, and whatever, they'll either stick with the plan, which they probably won't, or they'll just let everybody know they're going to delay it till July. Either way, the central banks seem to be just completely mismanaging markets, mismanaging their policy. I mean, they really are just, it seems like there's really no plan here at all. What do you think?
That's a really great question. I just wanted to circle back really quickly, just one quick note on the Brexit situation. I do think that if it does occur, we're going to start to see fiat currency chaos kick in with the Western currencies, including the dollar, and I think gold will be a big beneficiary of it. And I would also, we might talk about gold a little bit later, but I also think that if you just look at the commitment to trader data, or the open interest data on the COMEX for the last few days, the gold futures open interest has just soared, and that's the unmistakable mark of the banks trying to to manage the price and keep a lid on it. So I do think that if a Brexit does actually happen, away from all of the political ramifications, some of them we can't even foresee at this point, I do think it will be a very, very positive gold event. To get back to the negative interest rate situation, you referenced the German bonds, and that was actually the 10-year German bonds went negative for the first time. And again, I think what's going on there, in addition to the interest rate policy, the ZIRP and the NIRP policy, that would affect the short-term rates and short-term paper, and it affects the short-term paper over here. But I think in terms of when you start getting, a flat yield curve, or even, negative, to me, the idea of a negative interest rate out to 10 years is horrifying. And it doesn't, regardless of what country it's happening in, because that means investors are willing to lend their money to the sovereign entity for 10 years and pay them to take the money, right?
Yeah, it's horrendous.
That's essentially what that means. And to me, I can't even fathom that possibility. And aside from the fact that, you could say, well, if you're a big money manager, big institutional investor, or someone who's super wealthy, you say, well, I don't trust the banks enough to keep millions of dollars in the banks. But I know that if I buy this sovereign paper, the government will do everything within its power, including print money, in order to make sure that they don't default on this paper. So it's almost a dynamic. I think it reflects, in addition to the fact that it reflects the global economy going into a depression, not just a recession, I'm talking all-out depression. I think it also reflects extreme fear in the system of the financial system in general, that you're willing to put your large sums of money into a long-term piece of paper that, in order to have, a higher assurance that you're going to get that money paid back to you, even if that money pile's a little bit smaller because you had to pay to keep the money there, you're going to get it back, as opposed to putting it. You're not putting it in Deutsche Bank right now, because Deutsche Bank, by all signs, is going to go completely bust unless the central banks work to keep it from going bust. So if your choice is, okay, I'm going to put $10 million in Deutsche Bank or $10 million in German 10-year boons, you're probably going to choose the latter, right?
Yeah, it truly is amazing. Here they are pitching recovery to the masses, but yet the biggest institutions in the world are willing to actually lose money because they're that concerned about safety.
Yes.
Yet what they're telling everybody else is that, the Dow's on its way to 20, 30,000. The recovery's in place. We've got a job market that's revitalized. It's just, the whole thing's a big scam. And nothing is more evident than by the fact that the most wealthiest institutions and funds are willing to lose money because they're so scared about the banks. It's truly incredible. This really runs along with gold. Gold is having a tremendous year this year, full out breakout. You can call it a cyclical bull market, or perhaps the cartel is just coming apart at the seams. But one thing I really thought that was basically if there was any doubt in anybody's mind that this was the new rise, the next leg up for gold, when 2 weeks ago and last week, when gold was down by near $100 an ounce, the inflows for the ETFs and the mining shares barely budged. Money was going into the sector. This was the exact opposite of what we saw for the past, from 2011 to the end of maybe fall of 2015. What are your thoughts on gold? Do you think gold is getting ready for a major move up here? I'm talking about, getting past the $1,500 mark before the end of 2016.
Well, that's also kind of another loaded question, because in absence of the intervention that we've been seeing by the central banks, gold we'd be discussing $2,000 or $3,000 gold, right?
Yeah.
So, the fact that, and you're right, gold started to make this move in mid-December, and then the mining stocks followed suit in mid-January. So I think you're right. I think we could see 1,600 by the end of this year. Certainly 1,500, I think, is in the cards. And for me, the way I play the market is I just, every dip now I'm buying. So from 2011 to December 2015, every rally was getting sold off, and they were trying to take it lower, and they couldn't. Thing of it is, they couldn't get it down to 1,000 even. They couldn't get it below 1,000, despite all these Wall Street brokerage firms coming out and all these analysts coming out and saying gold's going to 800 or whatever. And so now I think this period of time where we're in right now kind of reminds me, again, it's sort of Mark Twain's history doesn't repeat, but it rhymes. The dynamic, and especially with the mining shares, it feels very similar to the period that was kind of 2002 to say, really 2002, 2004, but all the way up to March of 2008, which is when they started taking gold down again ahead of the great financial crisis, which was really a great financial collapse. And so I think what the dynamic is for the bullion banks and the central banks, I think what they're doing is what you would call a managed retreat, where they know that they can't push the price of gold lower. They know that there's a ton of institutional money flowing into the sector, which is evidence the money flowing into the ETFs. You got a ton of, very well-regarded hedge fund and former hedge fund guys coming out and saying gold's our number one asset play right now. And so I think they know that they can't push it down. I think what they're doing is what you would call a managed retreat, where they just try to contain the price rise of it. And they're just trying to keep it from, if you recall, and I'm sure your listeners, your audience recalls this, what happened to gold in 2011 when it, all of a sudden, it shot up from 1,600 to 1,900 very quickly. And if they didn't come in and knock it down, and really implement price control measures, gold probably would have hit 3,000 within a year. And I think we've a difference between now and then is I believe, and no one can prove this, but it feels to me like there's less physical gold for them to dump on the market now to help control the price than there was back then. I think they've run out a lot of that physical gold because we've seen China and India suck so much of it up. So I think you're right. I think we do have of sorts a breakout. A chartist would argue with us that it's not a breakout yet, but I agree. I think a big part of it is a psychological breakout. And I personally am not necessarily putting any price targets for the end of the year, like 1,600 or 1,500. I certainly think 1,400 is very doable. But again, once they start to lose a little bit of control of the amount of manipulation that they've exerted in this sector, all bets are off once this thing turns into a runaway freight train, and that could happen this year.
Dave, what are you doing to profit off of the movement that you see coming in gold? Is it physical gold? Is it options? Is it mining shares? Is it some sort of diversification? What are you doing to make the seize the opportunity here in the gold market?
Sure. There's actually three things that I'm personally doing right now. The number one thing is I co-manage a small precious metals and mining stock fund, and we buy physical bullion, gold and silver, keep it in a private depository, and when investors cash out, they're entitled, or they have the option of receiving their pro rata share of the bullion in lieu of receiving cash. So for the portion of the fund that's in bullion, they get bullion. For the portion of the fund that's in mining stocks, they get that in cash when they cash out. So I'm heavily invested in that fund. And so that's, over and above the physical gold and silver that I keep on hand here at my, under my own possession, my own lock and key, that's my physical gold and silver. The second thing I'm doing is I'm sure you're aware of the new service called BitGold.
Yes.
Right. So I actually have done a lot of work on that company, and I had a really long conversation with the CEO, I don't know, about 6 or 8 weeks ago, and I've been meaning to write that up and present it in my mining stock journal. I just haven't had a chance yet because every week I go to write it up, I come across a new junior mining stock idea that I want to present that I get really excited about. But I think the BitGold, although it's still a financial custodian of sorts, it does operate outside of the global central banking system, and so you're at least, to the extent that you want to try and move your monetary assets out of the financial system, you're at least one step removed from that when you move your money into BitGold. So every day that I opened up a BitGold account, and every day that they take gold down, I move more money out of my checking account and into the BitGold account. And it just sits there, and I'm using it. I mean, you can spend some of it because you get you can get a MasterCard debit card, and you can use it like an ATM or a credit card. And so, I spend some of it just for the heck of it. But that's to me, that's sort of more of a short-term oriented play on gold. It allows me to feel like I'm buying physical gold every time they hit gold, even though, because I don't have enough money sitting around to buy an ounce of gold every day that they hit gold, but I can move, a couple hundred at a time when they take gold down $5 or $10. So that's the second thing I'm doing. And then the third thing is, and again, it's, some people would say, well, when you play the mining stocks, you're exposed to a custodian, you're exposed to the system. That's right, you are. However, the mining stocks are, to the extent that we have systemic continuity and the doomsday scenario that we all think could happen doesn't happen, and that, at some point the custodians don't all disappear, the mining stocks offer you a way to really, make some lifestyle changing money by having the foresight and the confidence that investing in gold is the right sector, because for every percentage point move in the price of gold and silver, some of these junior mining stocks are going to go up, 5 and 10 times that. So those are the three things that I'm doing right now.
Yeah, and for investors looking for safety from all the things we were talking about earlier in the interview, I think you would probably agree with me on this, that the mining shares are great for speculation. They're great for potential investments. But if someone is specifically looking for safety, then it's physical. It's physical, and everything else falls under speculation and investment. What are your thoughts?
Oh, I agree with that. I agree. I think everybody who understands what's going on, and again, I would not put any money in any of the ETFs. I mean, the Sprott ETF is probably the most bona fide one, but you still have to have enough money in that ETF. For instance, to take possession of the gold, you have to have enough in there to take possession of a 400-ounce bar of gold. And the silver, I forget what the minimum amount is that you can redeem your shares for, but it's a lot. I mean, it's institutional size or very high net worth sized money. So I would not, if you put your money in GLD, you don't own gold. You own a piece of paper that gives you that indexes the rate of return on gold, but you don't own gold. So I think people should have at least 30% of their money in physical gold and silver that they keep themselves. What's interesting about the mining stocks, and again, this relies on this idea of systemic continuity, where the whole custodial system doesn't implode, and that there's some sort of continuity in our system. So some banks survive and brokerage custodians survive, etc. But I can envision a day at some point when the price of gold and silver are high enough. A lot of these mining companies, I think we could see a lot of them paying big dividends in actual physical gold and silver. And in the 30s, Homestake Mining did that. In fact, it got to the point at which Homestake was paying a $50 a share dividend in gold. And that's kind of another way to that it might be an opportunity down the road to take possession of physical.
Yeah, absolutely. And if you can't even cash out your stocks, I mean, really, who knows what the gold would even be worth at that point? I mean, if we're looking at a Walking Dead type situation, it's down to ammunition and bread and water. Dave, if somebody would like to reach out to you, where's the best place for them to go?
I have an email account that's connected with my blog, Investment Research Dynamics, and it's investmentresearchdynamics@gmail.com. And if people want to take a look at the Mining Stock Journal or my Short Sellers Journal, your listeners, can feel free to email me, and I'll be happy to send them a complimentary copy before they subscribe if they want to check it out to see if they want to subscribe.
That's great. So investmentresearchdynamics.com is the blog. Investmentresearchdynamics@gmail.com is how people can get in touch with you.
Yes.
All right, Dave Kranzler of Investment Research Dynamics. Thank you again so much for your time, sir. Hope to talk to you hopefully in another month or two. We got a lot of news coming out here.
That would be great. I'd love to be back on anytime.
Thanks, Dave.
Thank you.